This doesn't do a lot for sentiment, especially
No.
in places like in Europe. Is this a concerning factor to watch here? Does this lead to perhaps more weakness ahead, not just in the UK, but spilling over into the EU continent as well?
Yeah, I mean, people are very concerned this week, really, with world economic growth, especially overnight when Powell spoke about world economic growth. In the last week, we have negative surprises on GDP in Japan and now Germany. So the U.S. is really the strongest in the world, 3.5% in the third quarter, where I guess Japan fell 1.2% and Germany 0.8%.
So you're a financial economist, so you tie together many of these theories in economics with the way that they play out real world in financial markets. Is there anything that would lead you to believe that the U.S. is headed for a downturn sometime soon? The markets are certainly acting in a constructive way to the downside, that the economy might be slowing down here as well. What are you seeing from your end?
Yeah, it's all kind of chiming together, especially when you get major hedge fund owners talking about stocks are going to crater in a year and a half or so. I think what we're running into is a natural time limit for an economic expansion. People have been thinking about this for about a year. The longest expansion in modern economic history in the U.S. was 10 years under Clinton, exactly 10 years to the month. And this current expansion from the Great Recession, call it, finishes up next June. So people are saying, like, well, it was 10 years back then and it failed. Now it's going to be 10 years next year. When's the recession coming?
But that old saying, bull markets don't die of old age. That's what everyone keeps telling us here. But you're not seeing that. You're saying that there is there's a limit to how far this economy can go, given the time frame that we're seeing.
People are wondering about it. I mean, some of my colleagues at other Wall Street firms, economists, are saying they're not going to call a recession in the year 2020, but they're going to say maybe it's a growth recession, 1% growth, very slow growth. Or maybe the odds are 40%, extremely high in 2020. They don't want to say it's going to turn down, but everyone's kind of scratching their heads and wondering, like, where's the growth going to come from? The Jobs and Tax Cut Act, that's going to finish up next year as well.
So let's put some balance to this at the end. You're a financial economist. Let's take a look at what you think is the most constructive data point that you're seeing about the U.S. economy, and then what concerns you the most as well.
Well, for every traditional recession we've had, it's always been the Federal Reserve. They raise rates too high to fight inflation and cool down the economy, and it gets overdone. At the moment, they're only 2.25% for the Fed funds rate. The prior rate hikes that caused a downturn the last two cycles were 6.5% and 5.25%. We've got a long way to go before a traditional recession can take place due to higher credit costs.